Welcome to Byte-Sized Tech, where we blend casual conversations with insightful discussions on the latest in technology and gadgets.
That's right. Today we're jumping into some really interesting trends.
Yeah, we've got a bunch of stuff lined up. Everything from finding the next tech superstars to tariff troubles and some key earnings reports.
We're aiming to cut through the noise for you, connecting the dots on what's happening.
Okay, let's kick things off with this idea of finding future tech leaders super early. Ali Partovi's company just raised, what, $320 million?
Yeah, a huge amount. And their whole thing is identifying these promising college students, neo-scholars, they call them.
And nurturing them, right.
Yeah.
Giving them support to become, well, the next big names.
Exactly. And it seems like they've got a system, not just a lucky guess.
How so?
Well, apparently all of OpenAI's recent new grad hires were from their program.
Wow, okay.
And they backed companies like Cognition and Cursor early on. We're talking billion-dollar companies now.
So it's more deliberate, moving beyond just, having a knack for spotting talent.
Right. It's becoming more institutionalized, it seems. They talk about mentoring these students for a long time before funding.
Like Michael from Cursor and Iman at MIT. They got help finding internships, guidance.
For almost a year, yeah, before the investment came through. That's playing the long game.
And Walden Yan from Cognition, another neo-scholar success story.
It does make you wonder, though, what exactly are they looking for, especially now with AI doing more coding?
Is a computer science degree still the main ticket?
Well, Partovi's argument is interesting. He says it's less about the coding itself, more about how CS teaches you how to think.
Ah, like writing teaches you structure.
Exactly. That kind of logical, structured problem-solving, strategic thinking, maybe even some business sense gets built in.
Interesting perspective. And Partovi himself, an immigrant, still sees the U.S. as the place to be for ambitious people, despite immigration challenges.
Yeah, it suggests there's still that powerful draw.
And how does this compare to, say, Y Combinator?
It feels like they're going even earlier, trying to find that raw potential almost before the idea is fully baked.
Okay, let's shift gears a bit. This tariff uncertainty, it's casting a bit of a pall, isn't it?
Definitely. It's not just about prices potentially going up. It's damaging trust, making long-term business relationships harder.
And how can companies even give guidance if tariffs can just pop up unexpectedly?
It's almost impossible. The supply chain impacts are so complex and hard to predict.
So investors are basically being told to just wait and see.
Pretty much. It highlights just how uncertain things feel right now.
We saw a bit of weirdness with Texas Instruments earnings, right? Q1 looked okay.
Yeah, but was it real demand or customers just stocking up before potential tariffs hit?
Yeah.
That front-running idea.
Because PC and smartphone data looks softer, suggesting maybe consumers were front-running.
It's just murky. There isn't clear data for anyone, investors or policymakers, to act decisively in the short term.
But for the long haul, what's the thinking?
Well, the fundamentals for tech, the big picture stuff, AI advancement, generally healthy companies, tech being essential, that hasn't really changed.
So despite the tariff jitters, the underlying tech story is still strong.
Seems that way. And maybe areas like hardware, which took a hit from these trade worries.
Could be due for a comeback?
Potentially. I mean, you need the hardware for all the software innovation.
Okay, let's look at IBM. Their Q1 actually beat expectations.
Mostly on strong software sales, yeah. But the stock still fell.
How was that?
They warned about delays in signing new contracts, blaming it on, well, the economic uncertainty we just talked about.
And that software growth slowed down a bit, from 11% to 9%.
Right. That, plus IBM saying their guidance doesn't account for the economy getting significantly worse.
Probably spooked some investors, given the current climate.
And you have to remember, consulting businesses, which are big for IBM, tend to feel economic slowdowns pretty quickly.
Companies cut back on that kind of spending first.
Exactly. Though, long-term, people still seem to believe in their hybrid cloud strategy.
So IBM's story is quite different from, say, NVIDIA.
Oh, yeah. NVIDIA has those sky-high valuations, relies heavily on big capital spending continuing. IBM is maybe seen as more stable.
Plus, the dividend growth for IBM, that appeals to long-term holders.
Definitely. And the stock buybacks are just sort of a bonus on top of that capital return.
Now, something maybe a bit surprising. Tesla's sales in Europe dropped 20%.
Yeah, new registrations are down significantly. And it might not just be production issues or the model lineup feeling a bit old.
What else could it be?
There's growing talk about potential brand damage, especially in Europe.
Interesting. They've seen drops elsewhere too, right? like California.
They have, and some are connecting it to, the CEO's alignment with the current administration perhaps not playing well everywhere.
That political angle impacting the brand.
Possibly. Plus, there's focus on internal stuff at Tesla efficiency drives, executive departures, layoffs.
Human capital management concerns.
Right. There have been ongoing discussions since 2019 about things like racial discrimination, needing to attract and keep top talent for innovation.
And that lower-priced car is still delayed.
Which isn't helping sales volume. It's a contrast to, say, NIO, where the board seems more actively involved in overseeing human capital stuff.
Okay, let's zoom out. The broader market, NASDAQ's recovered somewhat.
Yeah, generally seeing gains across tech, software, hardware, social media.
Any standouts?
ServiceNow did really well after earnings. Their stock jumped.
Why is that?
Showed software demand is still pretty resilient, even with tariff threats. And interestingly, their AI tools are actually helping companies manage supply chain chaos.
Ah, so they're providing a solution to a current problem.
Exactly. And their public sector business is booming too, up 30%, lots of new government contracts.
So even though some companies are being cautious with guidance because of all the uncertainty,
we're also seeing this theme emerge where generative AI products are starting to actually bring in revenue. Details are still a bit thin, though.
and everyone's watching Alphabet's earnings next, right? High hopes for cloud.
Very high hopes. But also some jitters about search revenue, competition, advertisers maybe pulling back a bit.
It really is a mixed bag out there. Some headwinds, but also real strength in certain areas.
Absolutely. Companies solving problems or riding that next AI wave seem to be navigating it well.
Well, that's a lot to digest. Hopefully that gives you a clearer picture of the tech landscape right now.
Yeah, from finding future founders to global economics hitting company results, it's all interconnected. Maybe a final thought for you to ponder. How will this mix of early talent scouting, geopolitical tension, and AI innovation ultimately shape where tech goes next? It's always changing.
Thanks for tuning into Byte-Sized Tech. If you enjoyed the episode, like, comment, share, and subscribe for more fun tech discussions.